Hello, good day. My name is Yadal Dabur and I am a Forex Optimum Broker Financial Analyst. Back again to bring you all some of the reviews in the financial markets, having a look at on the worsening pandemic situation curbs global economy recovery at the moment. This elevates investors' concerns as well, and almost 70,000 new infections are being registered daily in the United States alone. At the same time, hopes for swift COVID 19 vaccine development persist. Several pharmaceutical companies are conducting research of a vaccination. Some have already started clinical trials long ago. So, chances that it will be developed soon as the chances are rising. Having a look at this week, investors focus on macroeconomic data that demonstrates the global recovery is slowing down and consumer activity in China remains low despite GDP growth was 3.2% in the second quarter of 2020. Federal Reserve in its BG book said economic activity is lower than pre-crisis levels even after quarantine is lifted. Technical picture of S&P 500 broad market index has improved since end of June, but the market is reluctantly growing at a snail's pace. However, long-term upward scenario remains intact since the index is traded lower traded above 200-day moving average that rests around 3,000 points. To rise further, S&P 500 needs to breach the target at 3,233.13. The demand for risks of assets, including US Treasuries, is retaining, and yield for 10-year benchmark Treasuries fell to 0.62%. Having a look at gold futures in August, that are actually trading above $1,800 per troy ounce. Gold prices have stabilized in the recent days and are boxed close to this level. However, factors that helped gold to achieve such 9 years high are still at play. Moreover, there are reasons for them to climb further in the coming days. Long-term growth scenario for gold prices remains also intact. We can expect gold prices could renew all-time highs of $1,900.20 per troy ounce. Brent crude on Wednesday renewed its 4-month highs at $43.79 per barrel, but failed to break through this summer highs of 43.93 per barrel. Despite these failures, bulls continue to hold a grip on the market, and we can expect a breakthrough of this level in the short term. US inventories published on Wednesday supported crude prices. Energy Information EIA reported that crude reserves fell by 7.5 million barrels, much deeper than 1.3 million barrels decline widely expected by the Wall Street analysts. The report showed that crude production in the US remains at 11 million barrels per day for the third consecutive week. That waved away fears of regarding possible production spike as a response of rising prices. Joint Ministerial Monitoring Committee (LMMC) the OPEC considered the demand of oil is on a recovery track and flagged OPEC members to reduce production cuts according to the original deal signed in early April. OPEC has agreed to reduce production cuts by 2 million barrels per day to 7.7 million barrels per day starting off August 1. OPEC plans to lower the cuts at the beginning of 2021 to 5.7 million barrels per day effective through May 2022. Despite this decision, crude market participants reacted calmly positive as real production cuts are expected at higher level of 8.1 to 8.3 million barrels per day. Saudi's Prince Abdul Aziz bin Salman said at the OPEC meeting, which was mentioned about the higher levels of 8.1 to 8.3 million barrels per day. According to OPEC decision, Iraq, Kazakhstan, Nigeria, Angola, Gabon, Congo that violated reduction cuts in May, June have to meet the obligations in August, September to reduce production by 842,000 barrels per day. Well, this fact was considered positive and nudged crude prices up. That's all for the week. We'll be back again to bring you more updates. Till then, stay tuned and have a good day. Bye-bye.